Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for NMP TV and brought to you by our friends at PRMG who are working for your best interest. Speaking of interest, we saw rates on the 10-year Treasury rise last week. We mentioned to you that 0.78 was very important, and as soon as it did break that, where did it go? Right to the 200-day moving average where it's battling. Right now, that'll be an interesting confrontation this week to see if 0.87 holds on that 200-day moving average for the 10-year. A break above that, we could be looking at a yield on the 10-year at 1%. Used to be an incredibly low yield, but now it's been on the high side of things. Now, mortgage-backed securities, they've been drifting a little bit worse, but they've been a bit resilient. Now, oftentimes, we will see follow-through on mortgage bonds after the Treasury makes its move. Let's see if that continues. So we do have to be really cautious this week with regards to rates, and one of the driving factors will be inflation. I've mentioned to you in the past videos to you that inflation would be pushing rates higher. Sure enough, you're seeing that unfold right before your eyes right now. Why? More demand, not enough supply, because we're getting lots of people still receiving unemployment benefits. Over 20 million of them, so that's slowing down the supply chain. And when you have more demand than supply, prices rise, causes inflation, and interest rates don't like inflation. Now, when we take a look at the report this week from PCE, it will be important to see that personal consumption expenditure. If we get a bit more heated inflation report, and for sure you will see interest rates. The other factor that you got to be on guard for is the stimulus deal. The stimulus deal will be something that, if it happens, chances are stocks will like that and bonds won't. I think the 10-year Treasury is pricing that in. Mortgage bonds have not yet priced that in. So again, we should approach this week more cautiously. With regards to housing, a lot of news last week. We're going to get more news this week, and housing is on fire. Now, last week, the media misunderstood a lot of the housing data, thinking that home prices rose 15%, 14.8%, because the median home price rose by that amount. Does not mean appreciation is that much. So the media gets it wrong, saying homes are unaffordable. You have to be able to combat that. Median home price just means half the homes sold above it, half below. Why did more people buy upper price ranges? Well, because first of all, there's not a lot of homes under 100,000 anymore. Secondarily, when you take a look at it, there is such fewer homes for sale in that lower price range, and they get gobbled up. So therefore, people are buying higher priced homes. Doesn't mean that the market is appreciating. As I mentioned, this week we'll get both FHFA and Case-Shiller. Now, I expect these numbers to be good, but not 15%. You'll probably be seeing something in line of about 5 to 6%, maybe a little bit above 6% on the FHFA number. So this will show really strong appreciation, but not where it's unaffordable like the media would portray. Meanwhile, new home sales flying off the shelf. Builders saying the traffic is at record highs, their confidence is at record highs. Another media misconception is that when they looked at the new home sales numbers, they said, well, it was okay, but it was really strong, because what you have to do is look at the lifeblood, and that's single family through the roof. Now, existing home sales, which we also got last week, oh my goodness, this was a really strong number. You take a look, up over 20% year over year in sales with very little inventory. Inventory is down 19% year over year. So it's amazing the strength and resiliency. Now, first-time home buyers dropped a little bit down to 31%, but that's simply because of a lack of inventory. You put it all together, you've got a great housing market that's going to endure and still remain hot into the future. So you have to be very competitive. Use the tools in MBS Highway to do it. That bid over ask tool is nothing like it. This is what realtors are saying is making all the difference. You should get yourself certified as a certified mortgage advisor, because you're going to need this heading into what's next. Now, next week, we'll take a quick look at the election. But until now, hope you guys have a great one. Talk to you soon.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.